What's up, everybody, and welcome to another cryptocurrency market update. In this video, we're going to be talking about Bitcoin as well as Ethereum, so let's get started. Here on the monthly time frame for Bitcoin, we're closing this candle in 2 days and 8 hours. We are starting to see this uptick in bull volume. It depends on the exchange that you're looking at, but on this exchange, we're seeing that increase in volume right here. We are overbought on the monthly time frame, but if this candle closes above the monthly high, that's a good sign for the bulls. But it is important to note that the main resistance level that I am aware of right now is this R3 level. Now, this is the level that I personally will sell my Bitcoin because of this rapid rising price and these two long upper wicks. I think that if we get up to the R3 level, that level is going to be significant resistance, at least on the first test. So let's look at the weekly time frame. Here on the weekly time frame, we have set a higher low in comparison to here. The RSI bearish divergence that has continued over the last couple months here did not push us down to the blue zone. The bulls bought the dip strongly here, and we'll talk about why that is and the support level that they were bidding on in just a second. But you can see that the next level, like I said, is that R3 level, and that's right up here at about 63K. We've already broken the high of the previous week here at 58.5. We have declining bear volume on this drawdown, meaning that it is likely that this next week we will go up to at least 63K, in my opinion. Let's look at the 3-day time frame. I'm going to take these off for just a second so we can see this a little bit clearly. But on the 3-day time frame, we have this blue zone. This was our last resistance level before we continued this uptrend that we had right here with our low, high, higher low, higher high. When we came back to test this level, you can see that this level held perfectly here. If you were to bid on this zone, I talked about this trade in past videos. I did not take it myself, but if you were to do that, you would already be up about 10%. So that is a pretty good trade. Also, it's important to note that you can see that we made a higher low in price in comparison to these two lows, but the RSI was at 63.56 here and 57.36. So we made a lower low in the RSI, but a higher low in price, and that's what's called a hidden bullish divergence on the RSI, and that's telling us that we have strength up here on this drawdown in price. There's less people selling on this drawdown in price, there's more people buying the dip on this drawdown in price than there was on this drawdown in price. I believe I may have misspoken there, but the main takeaway from that indication on a hidden bullish divergence is that the price should continue to trade higher. Now, we just broke the high today of the previous 3 days candle. That was an inside bar, signifying that once you see an inside bar get broken to one side or the other, it usually is indicative of expansion in that direction. So we are starting to begin that expansion right here. Let's look at the daily time frame to get a little bit more clarity on what we're currently running into. We have this R1 pivot level that we're currently running into, as well as this resistance level here back from the 19th of March. Now, this is the resistance level that we already tested once here. So it isn't as strong on the second test, and you can see that we pushed a lot further into it this time already than we did right here. So this is showing that it's weakening, in my opinion. And we also have this level right here, which is this white candle. Now, this white candle will turn into a very strong support level for us if we can close 2 candles above this zone. Now, the interesting thing about this zone is clearly whales are watching this level, because you can see both of these candles closed right at the edge of this candle, but neither of these candles closed above the actual high, which is at 55,888. This one closed at 55,875, and this one at 55,845. So we didn't get a candle close above it yet. Today, we likely will get a candle close above it, and if we do, then the next following day, which will be tomorrow, if we get another candle close above it, that will make this red zone a support zone, and I will look to long a retest of that zone, which is what I've been waiting for days now. you know, because I'm a trend trader, so sometimes you have to wait for the trend to open itself up for you, and then we'll be targeting 63K. Now that's if we don't just already go up to 63K. If we go up to here and then come back down, I don't like the level as much. But if we kind of meander around this area here and then come back into it, I really like that zone for a push into the 63K level. That will take us, if we put one of our bids at the top of that level and then one of our bids like at the body, it averages out to about right here. We put our stop loss below and we target, it's about a 14% gain with about a risk reward of about 3.65. Now it depends on where you put your entry. If we were to put it at the absolute top, which you know is still a good risk reward, 2.43, it changes that risk reward, and you'd still, you know, the target would still be about 12.78%. Now let's look at the lower term time frames real quick, just to see what we're dealing with, and currently it's very interesting to see what we're looking at with here on price. It's very similar to what we saw right here with an inverse head and shoulders pattern that we called way back here, and we were talking about the target for that was right up here, and it went perfectly to that target, immediately sold off significantly, and then we went into this little bear trend here until we formed another inverse head and shoulders right here, and now we're trading above that. Now you see when this one initially started going, it didn't retest the neckline, which is right around here. It got near it, but then just ran away with it. So if you missed the initial entry, which for this one might have been right here, this trade right here, which I did not personally take, but you can see it was confluent with the pivot level right here that got printed, as well as this support level right here, this black candle. So this black candle was our support level. We bounced off of that. Boom, we traded up. We talked about this level in the previous video and talked about, or no, that was this candle back here that we talked about, was that trade. But this was a level that was longable. But the next longable level for me is this purple zone right here, which is this 4-hour candle from 0 o'clock on the 29th. So if we come all the way back down to that level, that will be a good area to go long, in my opinion, and that will be targeting a minimum of this R1 level, but most likely up to the 63 level. Now the interesting thing about this inverse head and shoulders, where we have our left shoulder, head, right shoulder, and this is, if you're not familiar with this pattern, it's a bullish reversal pattern. So it means that on a downtrend, this is signifying that the downtrend is over and we're reversing the price action to be in the bull's favor. So when this occurs, the price target for this pattern is to take a measurement from the head, which is this ultimate low, and measure that up to the neckline, which is where both of the left and right shoulder meet. Now this might be slanted or it might be horizontal. In this case, it's pretty horizontal, so it's going to be right about here. That's about 6,300 points, okay? So then what you do for that measurement is you take your tool, you go right from the point, their neckline, and you measure that up 6,300 points, and that takes you to about 63K. So that is consistent with this R2, but also that weekly pivot that we looked up at the R3, which is 63K. So all signs are pointing to 63K as the target if this pattern is valid and if we continue to trend upwards. On the Ichimoku cloud, we just broke above the cloud, which is bullish. The TK, we just got a bullish TK cross here with the blue line crossing above the red, and the red cloud is starting to get a little thin here. If the red cloud starts to get turn green, flip green, and these start to go above the cloud, that's even more bullish for price, but we're already in bull price territory, so I might buy a tiny bit of spot BTC and then hold that for 63K. Let's jump over to Ethereum now and start off on the monthly time frame. Similar to Bitcoin, we are going to be closing this candle in 2 days and 7 hours. Although we are seeing declining bull volume and an overbought RSI, we have an inside bar here where all of the price action for this candle is contained inside of the previous months. When you see this, it's like the price is tightening up. So that means that when it when it breaks the high or the low of this candle, probably in the next subsequent month, if we don't break the ultimate all-time high this month, which in 2 days and 7 hours, I mean, it's possible for us to trade up to there and go above it, but we might not. If we don't, whatever way the subsequent month breaks to the upper side, the high of the candle or the low of the candle, whichever way we break, the price will expand in that direction. So let's look at the weekly time frame. We've been talking about this equilibrium pattern here, which is a pattern where the price is making higher lows and lower highs, and it's not making a higher high or a lower low, so it doesn't have an established trend. So right now we're seeing that here, where price is tightening up. Now this is whenever this happens, whatever way it ends up breaking is it's kind of like a rubber band where you're stretching it and then it snaps when you let go of it. It's very similar in price action. When it tightens up and there's not much volatility, when something does happen, it snaps and there's a lot of volatility, meaning there's a lot of price movement, either up or down. So if this breaks up, it's significant upside. If it breaks down, it's downside. So this is what we're dealing with. It's kind of a triangle if you look at it with trend lines, like this. So when you have a triangle like this at the top of a bull run, this can be a continuation pattern. So this can be a pattern that's signifying to us as ETH bulls that this price action is going to continue higher, because this is just kind of like a consolidation period where some people were selling their ETH and some people were buying more of it here. So the first level that we would need to break is about 1950. Let's go to the 3-day time frame and talk about the ETH trade that we highlighted in our global Telegram channel. And if you're not a part of that, it's a free channel that you can join. We already have a ton of global members in there. In the Lutheria community, there is a link in the description below. We post different trading ideas that we have in there, as well as a bunch of other educational content. So definitely join that. But this is the level very similar to Bitcoin that we saw in the 3-day time frame when we changed this trend to bullish. This black candle was our support level. I know one of our community members took this entry, so he's already up about 9%. So that's good for him. I'm happy for him. So that is continuing to go higher. Now, on the 2-day time frame, if this red zone, if we end up trading right through this, which at this point it looks like it's not a stretch to say that we could go right through the zone at this point, since we're already majoritively through it. If we go above this and close two-day candles above this, this will end up being a strong support zone for us. And that level is from about 1840 down to about 1700. Daily time frame, we just formed a higher low here and a very strong bullish candle here as we just broke the weekly candles high in this video. Actually, you can see the previous weekly's high was 1810.4. We are at 1818 right now. So people are buying ETH on this rise in price. ETH very similar to Bitcoin in the inverse head and shoulders pattern. The target for this is right around up here at about like 1920 something. So that is where this ultimately will go. The level to watch in terms of a tradable opportunity here, if you're not just buying spot and holding it for that rise in price, the level to watch is this yellow 4-hour candle right here from March 22nd. This is the level that I will look to go long on ETH. If we get this candle, which closes in 2 hours and 53 minutes, to close above this, and the next subsequent candle to close above it, that will turn this level into a strong support zone. Let's see if there's any other confluence here. We're currently running into the R1, but you can see that this zone is a very strong horizontal level. So right now what I'll probably do is I'll probably buy a little bit of ETH right now just in case we don't come back and test this zone. But in my opinion, what I could see as likely is we come up, we maybe hit this high and then come down into this level, test it, and then go up for the ultimate high. But you can see, like, whenever I have like confluence with the VPVR like this, where the high volume node is directly in line with my support level, I always really like to see that, and that is a level that I will feel more comfortable risking a bit more of my portfolio. You know, in terms of risks, like, I like to keep it in between 1 and 3.5% of my portfolio for any given trade. When I see things like this where you have more confluence with a trade, you can start to look at it and say, okay, I was going to do, 1.5%. Now I'll feel comfortable doing 1.75% or maybe even 2. So you have the bullish inverse head and shoulders pattern that you're running with. You have the untouched support level right here. If we close 2 4-hour candles above it, which at this point we just pushed right through it like it didn't even exist. So that that probably will end up being the scenario here. And then we have the VPVR. So ultimately, that's what we're looking at on Bitcoin and Ethereum. I hope this video was helpful for you. Definitely join our Telegram channel so you can talk about different setups like this and more with our global community and get engaged. We're all working towards achieving a more fulfilling life by achieving digital self-sovereignty. So definitely join that and join in kind of the revolution that's happening inside of our community there. And until next time, onward and upward.